Good morning, starshine.
Welcome to the real world. Whoa! Mortgage your house and buy Bitcoin with breathe air. There's no second best, okay?
GM. So today, because it's Saturday, and there's probably not much happening in terms of the market, outside of some memes and that, I want to do a little bit of a mini lesson about what I was writing last night. So everyone should read this if you haven't already, last night's post, about understanding probabilities and volatility. It is an absolute undeniable fact that stuff goes up a lot in crypto from time to time. It's also an undeniable fact that stuff goes down a lot in crypto. And yet, when you're new, and even when you're not new, there's people who've been doing this for years, it's easy to still think that somehow you are going to be able to capture the upside, all of it, the 10x, 100x, massive gains in a really short space of time, and then also keep it. It's not something that is possible to do consistently over time without a thing called risk of ruin. Risk of ruin is literally how likely you are to lose everything, and it's entirely based upon how much you are risking. So the first thing, you see a lot of bullshit online about someone on Twitter, oh, I called this coin, it's up 100x. Cool, fine. Just because something went up 100x does not mean you make 100x of your entire money. Because if you put all of your net worth into one coin and it goes 100x, well done. You've essentially won the lottery. You've took the stupidest possible risk you could do, which is putting all your money into one extremely low probability bet, and it just happens to have been the 0.1% chance, the 1 in 1,000 chance that's hit. 100x, the odds of 100x is not 1%. You might think that, oh, it's 100x, it's 1 in 100. It's not. Just like in casinos, your odds are not what they say on the screen. There is an edge built in for the house. In the market, you could buy 100 different coins and get nothing even remotely close to 100x on any of them. You could buy 1,000 and it wouldn't happen. There are 20 or 30 or 40,000 coins at the moment. How many have gone 100x? Hardly any. So unless you're catching stuff at the very day it launches and then it goes all the way up, sure, but there's problems with that too. Number one, you can't buy much, illiquid. Number two, you're going to get, again, dozens if not hundreds of stuff that goes just straight to zero because you're buying stuff that's brand new and never moves or pumps a little bit and then just rugs. It's not a repeatable strategy. I wrote a part here which should explain it. It's called extrapolation bias. So if you've ever made a lot of money in a short space of time in the market, I guarantee you've never repeated it with the same system because there was no system. And I have done this. I've traded like this when I started. I mentioned there in the post that I turned 10k into almost 400k in about 4 months by trading way too aggressively, by rolling profits from one trade into another, and essentially by hitting 3 or 4 big winners consecutively. One loss would have wiped out half the balance. So if that 10k, when it turned into 75, and I put that 75 or most of it on into the next trade, if that had lost, I'd have wiped myself back down to 20k. Just happened to win and it put it to nearly 400. But then that's not sustainable. You're essentially relying on, you're flipping a coin, right? It's like flipping a coin and saying, coin is 50-50, I'm going to put all my money on heads. And you get heads. You turn your 10 grand into 20. And you do it again, 20 into 40. You do it again, 40 into 80. You do it again, 80 into 160. And holy shit, you did 4 flips in a row, all right. But each time you're putting all of it on, and as soon as you flip a tail, you're back, done, zero. And then so people are like, yeah, but I wouldn't do that. I would make the money and then I would reduce risk. You don't know when or how. Everyone thinks that, no, when I make X amount, I would then step back and reduce back to proper 1%, 2%, 3% risk. But you wouldn't, because you're intoxicated by the possibility of running it further. It doesn't matter. When I turned 10 into 400, I was thinking about a million. That's it. I didn't think, holy shit, I've just 40x'd my money in a short space of time. Did not think that. I thought, let's go. I don't need to 40x it now. I only need a 2.5x and it's a million. Didn't happen. Because the approach is all wrong. If you can grow it that fast, you can and will lose it just as fast. It's simple, really basic maths. The best hedge fund in the world, the best fund, Medallion Fund by Jim Simons, Renaissance Technologies, average 0.2% compounded per day for 30 years. So that is an example of a daily return that the greatest traders, the best fund ever has had for a long enough time frame that it cannot be chance. You can't do something for 30 years and it be luck. There is no luck involved. It's 100% skill and correct risk management, strategy, all that. So if you're able to, and you can, this happens every time we have a bull wave, you will make way more than 0.2% daily. You'll be holding coins in your portfolio and your portfolio will go up 50% overnight. You have to understand that this kind of return is not sustainable long term. This is why crypto has the big moves up, the big moves down. This is why you hear so many stories about retail round tripping their gains. And I made all this money, but then I lost it. And they're confused as to why. There should be no confusion, because the chances of it happening in the first place are infinitesimally small. And people don't know when to get out because they didn't know why they got in. Because if they were thinking with any kind of proper risk management, they wouldn't have taken on those type of bets anyway. And so you can do it again, right? And I did it twice or three times with trading approaches and with bull market moves. It doesn't even have to be a bull market. It's just about trading. This also applies to your trading portfolio. I did this in bear markets too, where I was trading just standard long and short Bitcoin, trading it up and down, range trading, mini trends, breakouts, reversals. Doesn't matter if it's a bull market. The approach to risk is the same. I've ran up accounts very aggressively in bear markets by shorting. And the problem though is that at times I could have been using 10 or 15% of my portfolio as my risk. And if you win 2 or 3 in a row, boom, suddenly your portfolio is up 4x in a bear market. You're like, holy shit. But as soon as you have a loss, you're wiping out 20% of your capital. And then you just don't. You just don't think once you had that first loss, oh, that's a sign I really need to stop. I was just lucky. It's a random chance. No. You're like, well, I had 10, I've now got 200. Or I had 10, I've now got 50. I know it dropped back to 40, but I'll put on another trade. And I'll get it back to 50. And then next year 30. And then you're at 20, and then you're at 10, and then you're at fucking 0. You're not special. I'm not special. Nobody is. Jim Simons was. And he could make 0.2% per day for 30 plus years until he was worth $16 billion. But he never tried to make 10x in 6 months or 3 months. Because it would just never even be possible, because they wouldn't put on the amount of risk required to get that. If you're going to 10x in like 6 months, you have to have all your money in coins that can go 10x. That means your entire portfolio is exposed to something that can also go down 90%. Jim would never do that. Paul Tudor Jones would never do that. None of the best traders ever would ever do that. Jesse Livermore did it. He could make millions of dollars. Also lost it 7 times and ended up killing himself and had 5 divorces. So despite being one of the greatest traders ever, it's also a cautionary tale if you read Reminiscences of a Stock Operator, because this is somebody who undoubtedly had the skill to trade, but couldn't risk manage, could make loads of money, but couldn't stop pushing the envelope, and made and lost cumulatively billions of dollars in today's money. Never could really keep it. So there's making it and keeping it. You will make it. Someone listening to this, many of you listening to this, will make loads of money in the next year, whether it's from standard just trading practices or that plus a bull market wave where stuff goes up a lot. Keeping it is an entirely different story. Because you can either decide, okay, I'm not going to take massive risk. I'm not going to put all my net worth in a meme coin, which means you're not going to get exposed to like a 100x pump. But you're also not going to go down 90%. And you're going to grow it more consistently. by following a strict set of rules, and you're going to still be here next year, and you're still going to be here the year after that. And guess what? In 2028, you could have millions of dollars. Because you can take a relatively small amount of money with correct risk management and correct compounding, and you can grow it and add to it over time, and then it multiplies at a steady pace year over year and builds and grows into something bigger than you could ever imagine. 0.2% a day does not sound like much. The Medallion Fund of Renaissance made 66% annually average. That's 66. Imagine turning $1,000 into $1,600 in a year. Wouldn't feel like much, right? Get your calculator out and do that for 30 years, and you'll see how much it is. Because it's 66 each year, and it compounds, and the stack grows, and then you add more, and the stack grows, and you multiply it again, and the stack grows, and you multiply it again. And suddenly, it's tens of millions of dollars, if not billions. So you can approach it like a pro and not think about the next 3 months, think about the next 3 years. And understand that when you're good at something, like trading, and you understand how to do it, and you actually can turn $1 into $2, and you can do that consistently over time, you're never going to stop. Because why would you? Why would you stop doing something that you're good at that also pays you out in rewards? Once you accept that, you understand, wait, I'm going to trade for the rest of my life. So if you're 20, you can be wealthy beyond your dreams by 30. Without taking any major risk. Just the regular risk of being in the market. Of course, there's risk. But without ever exposing your whole portfolio to liquidation. Without ever being able to lose 30% of your net worth in a day. Without ever doing any of that, you can turn a small amount of money into millions of dollars in 5 years, 10 years, 15 years, whatever it's going to be. Or you can try and YOLO it all in one bull market wave and maybe make a lot, not know how to get out or when to get out, and then run it all the way back down. It's akin to lottery winners. The difference is people in crypto, like if I asked 1,000 people, do they think it's worth playing the lottery? They'd say no. But then they'll say it's worth YOLOing their entire net worth in crypto. It's no different. There's a false sense of, I guess there's a false sense of how realistic it is, because you can always see people who've made loads of money in the market. And there are people who've made loads of money in the market, but they don't tell you about losing. Everyone posts on Twitter about the 100x they called. They don't tell you that they only had $10 in it. Right? They just want clout. And the person you see is, holy shit, this guy made 10 million. It's like, yeah, survivor bias. They might have been the one who put all the money into one coin and just stuck with it, and it happened to go up loads, and they happened to take profit. For every one of those, there are tens of thousands who went to zero, just like lottery winners. So, this is a reality check. If this triggers you, good. Because you might think that you're going to be the special one, but you're probably not. And isn't it much better to think, okay, if I focus on not dying first, survival is number one. And I understand that over time you can multiply a small amount of money into a lot of money through the power of compounding. Then you can make, and by the way, you can make 5, 10, 20x returns within a bull market phase. As long as you stay grounded and understand that can't happen for 4 years in a row. For a few months every 4 years, that happens in crypto. January to May of 21, it happened. Then October, November 21, it happened again. Then we had 2 years where nothing like that was even remotely close to happening. And then now it's sort of starting to happen again a little bit. And it's much shorter than you ever think. And by the time people think, holy shit, let's get in, it's already over. We had a little phase, October to March of last year, October 23 to March of this year. Then it ended. It's been over now for several months. There's probably going to be something similar again happening in the next year at some point. But the massive down moves are coming. The 20%, you wake up one morning and everything's down 20% because of massive liquidations. It's happening. It's coming. And if you're there with an over-leveraged position, or you're there with all your net worth exposed long, and you wake up and it's down 20% and it doesn't bounce, this kind of stuff's going to happen. So you have to approach it with a perspective first of, I don't want to die. I want to make sure that I am making money and that I am taking some off the table when my systems tell me to take profit. And I'm trying to compound it over time. I'm not trying to put all my money into one thing and just hoping that it goes up. Hope is not an investment strategy. It's not going to happen if you just think, oh, well, just bull market's going to bail me out. It's not. The whales are going to eat your lunch because they're going to be taking profit while you're up 2x and you're hoping for a 10. And they're already up 50x because they're in at the lows and they're insiders. And they're just dumping on you. And you'll think that, and this is the last part, all of this is not meant to be in any way negative. It's realistic. You can look at this and think, oh, this means you can't do, you can do anything. You can make 10x in a week. But you can't do it consistently over time every single week. Otherwise, you'd be the richest man in the world within a year. So you know this isn't possible to do consistently. You mistake a small sample set, right? You mistake a random series within a random set of trades or results within a series for something that's consistently possible. A coin that goes up 10x, let's just take any coin, right? Celestia, good example. Celestia literally went up 10x. So Celestia went up 10x in what? 3 months, right? 10x, 3 months, $2, $20, followed by all of this. And it's never going to go there again. There's no 10x coming on Celestia again. It's just not going to happen. If it does, well, nothing's ever impossible. But if it does, it's going to have to take way longer. Like, we're talking multiple years again before it happens. So it's not like it can't do it. Bitcoin did it, ETH did it, Solana did it multiple times over. But that 3-month wave can be followed by, first of all the way down, 80, 90%, and then way more time, right? Where it's up 3 months, it could be down for the next 2.5 years. That's just how it goes. These things are not, there's nothing good about these. They're not good projects. They're not good teams. It's all bullshit. Hyper volatile assets that go up a lot and then preceded by down for fucking ever. So, you can make loads of money. You can make loads of money very fast. Making and keeping it are two completely contradictory things, because to make it so fast, you have to take abnormal amounts of risk. To then think that you're going to keep it without losing any, it's like you're threading the eye of a needle. It's like you're going to make 100x on a coin and think, I'll just do this again. You know you're not going to do it again, because there's no consistently reliable way to make that 100x. It can happen. Don't mistake something that can happen for something that's likely to happen or something that's repeatable. Can you win the lottery? Yes. Is there a system or a strategy to win the lottery? No. Is there a system and strategy to make money in the markets consistently over time? Yes. And multiply a small amount of money into millions of dollars? Yes. But it takes time and patience and discipline and consistency. So it's infinitely better than the casino, infinitely better than the lottery, because there's no strategy for roulette. There's no strategy for the lottery. There is a strategy for the markets. And the first thing you have to do is not treat it like a fucking game of chance. Not treat it like a gamble. Not treat it like, oh, I hope this is going to be the one. Treat it like a professional.